Good morning. This is the chart of the week, or actually the charts of the week. It's also a warning against the largest financial bubble we have ever seen, not just in equities, but in risk asset in general, also in Bitcoin. It's also a warning against believing that Bitcoin will be a hedge against the market crash we likely could see. This is the Nasdaq, and we see how we in the dot-com days saw a decline from the top of 85% to the bottom. That was at a time when the market capitalization to GDP was at 136% at the top. In 1929, we had a similar for the stock market in general of 86%. In 2007, it was at 107%. Today, we are at 226%. And if we exclude the crypto, well, then we are only at 215% at this point. I am not saying that we have reached a market top yet. Please note this point. I think we can see the market moving higher. 27 to 28,000 on the Nasdaq is absolutely possible, and I think we're going to go there. We also see how we've been moving, how Nasdaq has been rallying by 21 to 22 times since 2009. This is absolutely unprecedented. And we see how we have a negative divergence into this, what is a rising wedge. I think the bubble will burst in the near future. And when it does, I could easily see a decline of 75 to 80% in the Nasdaq. Comparable or even maybe below what we saw in the dot-com days. Remember, the bubble is bigger this time. Even when we discount for M2, money printing, liquidity, we see how the Nasdaq is actually in a bigger bubble than we saw in 2000. And when we look at the Nasdaq, S&P, and Bitcoin, and we see how closely correlated they are, they move together. When one rallies, the other one rallies. And when the other one declines, well, the other declines. This is a very strong correlation when you see between 60 to 100 on the correlation scale. That is what we have. And then we hear that people say that, well, the central banks, the Fed, will not allow a decline and a crash in the market because liquidity. And we know how people have been talking about how liquidity, M2, has been the reason why Bitcoin has been moving higher. Well, into the dot-com days, we saw how the S&P actually dropped here while liquidity was going higher. And the Nasdaq dropped by 85% while liquidity was going higher. We saw into the financial crisis how liquidity was pushing up really hard here, and we saw how the Nasdaq and the S&P dropped strongly in the financial crisis. So, liquidity cannot withstand the turn of the business cycle. Stock markets will crash when the real economy hits a brick wall and we see a recession. And if we then turn to the Nasdaq and Bitcoin, because of the close correlation, we actually see that Bitcoin outperforms Nasdaq, not just to the upside, but also to the downside. In 2020, we saw Nasdaq declining by 28% into COVID crash. We saw the Bitcoin dropping by 63%. Nasdaq in 21-22 dropped by 38%, Bitcoin by 77%. Now remember that, as I said, we are in the largest bubble ever. No question about that. And I think we could see a 75 to 80% decline. See, if Bitcoin drops by 63% with a 28% drop here and 38 here, a 77, what would I expect Bitcoin to do if we see 75 to 80% decline in the Nasdaq? Well, I will not first of all think that Bitcoin would outperform or actually do well in that crash. I think it would outperform to the downside, which means that it could drop by more than 75 to 80%, if I'm right. And if we look at Bitcoin, reverse it, turn it upside down, and look at the pattern we see and the momentum of that pattern, we see how we have a bullish divergence into this development. It speaks of a potential and soon coming bottom, which means a new extreme all-time high is coming in Bitcoin. I expect that, as I do also with Nasdaq. But it should be the final bottom here, and we should see it actually reversing and moving higher here, which means lower for Bitcoin, much lower. Remember, if Nasdaq drops by 75 to 85%, we could easily see a decline of a 90% or 95% into the crash. This is what I think can happen with Bitcoin. A potential decline of around 95%, maybe worse, into the bubble top or after the bubble top. This is not based on beliefs. This is based on past correlation and not what we have seen historically. So Bitcoin is not a hedge. It is actually a risk asset, and it's a risk asset that will outperform Bitcoin to the downside after a potential blow-off top. Thank you.